Gold has had a massive year. We've seen a 29% increase from the start of January to the peak. We've seen the inverse of what you would traditionally see for gold flows since the start of this conflict in the Middle East. Yesterday, we saw another downside move, and we've only really seen downside moves from gold when geopolitical concerns increase and war starts. You normally think gold would hit high. We have seen the complete opposite of that, and we bottomed out on the move recently down just below $4,100 for gold. Hello and welcome to ATFX's gold update. We saw huge moves across the market on the back of updates on the ongoing conflict in the Middle East. First up, we got information from President Trump that there will be a further winding down of US commitment in the Gulf and that talks are going extremely well with Iran. That saw huge moves of relief rallies. We saw oil come off. We saw gold rally, incidentally. Stocks rallied, yields fell down. Now, shortly after that, we got comments from the Iranians that no talks had taken place and that the conflict would continue to move on. We did see a reverse of those moves, but not as much. And the market has sort of come in today and taken it as a glass half full type situation that certainly if the US are looking to wind down things, then we could be seeing a bit of light at the end of the tunnel of this conflict and war that we've got going on in the Middle East, giving a lot of relief to markets. Our focus today has been on gold. And now the interesting thing for a lot of people, especially old timers like myself, is we've seen the inverse of what you would traditionally see for gold flows since the start of this conflict in the Middle East. Yesterday, we saw another downside move, and we've only really seen downside moves from gold. Apart from the first day, the initial reaction was to move up, which is normally what you'd expect when geopolitical concerns increase and war starts. You normally think gold would hit high. If you asked most people if war was going to kick off in the Middle East, it was sitting around 5,400. You would be anticipating fresh new highs and maybe even a challenge of 6,000. We have seen the complete opposite of that. And we bottomed out on the move recently down just below $4,100 for gold. I'm going to bring us onto the chart now just to have a quick look, see what trading opportunities we've got out there. So here we are, those of you familiar with our updates. This is the daily chart that we've got for gold. As I said, start of January, back here, there we go, 2nd of Jan, there's the low, 4,300, all the way up to that high, massively sharp correction here. A lot of structural things going on, talk about BRICS countries buying a lot, all backed up, retail traders piling into it. You saw gold buyers queuing down the streets, even here in Sydney, certainly lots over in the Chinese market and India market as well, taking us up to these highs. A lot of volatility since then. This has pretty much been the start of the conflict in the Middle East. As you can see, yesterday we peaked at about an 18% drop. That's a massive move considering the world is kind of at war. Not what many people have expected. We did see a little bit of move down, possibly on the back of the stronger dollar, bit of consolidation over this $5,000 level. But in the last few days, the last week, it has absolutely collapsed. Yesterday, as you can see here, we finished up just 1.82% down. But once it broke that relatively weak support level, that's a 10% move on the day. That's huge move. Interestingly enough, it did find support right on that 200-day moving average. So some of the technicals are working and some of the break trades have worked really well for gold. But the question we've got now is, where do we go? Oh, you have to trade what we are seeing in front of us. At the moment, we're seeing gold trade on the back of the dollar outlook. And don't forget, before we entered this conflict, we were looking for 2 rate cuts from the Fed. Some of the market was pricing in just the one. Now, the market is pricing in a 50% chance of a rate hike in October from the Fed. So we have seen a flip of those indications of Fed rate expectations. That does account for some of the dollar side of the move. At the moment, I think we have to play what we're seeing. If things are looking better, and this was the rally we saw, like an 8% rally on the back of President Trump coming in and saying that there was going to be a ceasefire, there was going to be some progress in the Middle East. From a technical level perspective, I've left this former support trend line in because it was the break level that we saw over the course of yesterday. So resistance will now come in around 75. And as you can see, it topped out so far today around about 44.50. Above this, you're then looking all the way up to that longer term longer term resistance trend line. That comes in at 52.65. Obviously support, we got support last night, so we've got overnight and the 200-day moving average. That's coming in around about 4,100. Longer term support, and this is a good long-term support line coming here. I know the chart's a bit confused because we've had so much in the way of moves now. So support then coming in probably around about that 4,000 level. But plenty of potential for volatility in the days, sessions, and weeks ahead for gold. So keep an eye on it. You have to adjust your gold strategy. You've got to have a look at your capital management strategy, your risk management strategy, because we're seeing so many big percentage moves. But obviously, opportunities are out there, as is risk. So as always, if you need anything from us at ATFX, please do come to us. Good luck with your trading, and please tune in. If you haven't already, please subscribe to our channel. We'll keep you updated as much as we can with what's going on, because it's going on, and it's going on fast and hard.